Welcome to the Deep Dive. Today we're jumping right into HealthEquity's latest earnings Q2 2025. We'll quickly unpack the key numbers, see what's behind them, and look at their projections. Okay, so let's unpack this, starting right at the top, the financials. HealthEquity's revenue, it soared to $325.84 million.
Wow.
Yeah, that's up a solid 8.6% year over year, and comfortably beat the Zacks Consensus Estimate, which was around $318.8 million.
Right?
And maybe even more impressive, their non-GAAP EPS, the core earnings number, hit $1.08.
It's a big jump from last year's $1.86.
Exactly, and way above the $1.92 estimate. It's like 17, almost 18% surprise. So what's a beat like that really signal beyond just, good figures?
Well, what's fascinating here is it's not just scraping by. These numbers, they point to some real underlying strength and, frankly, good execution. They also reported a record gross margin, 71%.
71%. Wow.
Yeah. And adjusted EBITDA, which gives you a good sense of operating profit, was $151.1 million. That's an 18% increase from last year.
Yeah.
So for you listening, this shows HealthEquity isn't just growing the top line, they're doing it very profitably. They seem to be navigating this whole health savings space quite well.
Yeah, those profit and revenue numbers are definitely eye-catching.
Yeah.
But I always find the operational metrics, well, that's where it gets really interesting, right?
Mm-hmm.
They often paint a clear picture of the business health.
Yeah.
So beyond just revenue, what are the core drivers telling us?
Absolutely. If we dig into that, total HSA assets grew to $33.14 billion.
Okay.
That's up 12% year over year, and it beat the estimate, which was closer to $32.5 billion.
Still strong growth then.
Definitely. And total accounts across all their different platforms, they hit 17.14 million. That's a 5% increase, also beating the estimate there. But the real standout, HSA investments, they surged 23% to $16.1 billion.
23%?
Yeah. Blowing past the $14.78 billion estimate. But, this raises an important question because it hints at something interesting. While most numbers were up, a couple just slightly missed the mark.
Oh.
Well, HSA cash was $17.04 billion versus a $17.7 billion estimate. And the number of pure HSA accounts was 9.99 million, just under the 10.1 million expected.
Okay, so cash and account numbers slightly soft, but investments way up. What does that suggest?
They kind of suggest that maybe, while growth in new basic accounts is solid, the existing users, they're really leaning into the investment side, treating their HSAs less like just a savings pot and more like a long-term investment tool.
Oh, yeah.
So for you, the shift towards investments, outpacing the cash side, it signals maybe a more engaged, more sophisticated user base thinking longer term about healthcare costs.
Yeah.
It's a pretty valuable customer to have.
That makes sense. That distinction is pretty crucial, isn't it? Capturing users who invest means, well, more engagement, potentially higher value over time.
Exactly.
And that lines up with the positive tone from the CEO, Scott Cutler. He mentioned continued momentum and even brighter outlook, citing this legislative expansion of HSAs.
Right, the biggest since 2006, he said.
What does that actually mean, practically speaking, for HealthEquity and, for people with HSAs?
Well, it's not just vague policy changes. We're likely talking about concrete things, maybe allowing HSAs to cover more types of expenses or increasing how much you can contribute each year, maybe making investment rules clearer.
Okay.
Things that basically make HSAs more attractive and useful for potentially millions more people. It directly expands their potential market in a way we haven't really seen for, well, almost 2 decades. It gives you, the consumer, potentially more flexibility and tax benefits. It's a real tailwind.
Gotcha. So, strong Q2, positive legislative wins.
Yeah.
What does this translate to for their forecast? What's the outlook for the year ahead?
Right. So we connect this to the bigger picture. Their guidance for the fiscal year ending January 2026 seems pretty confident. They're projecting non-GAAP net income to be somewhere between $329 million and $344 million.
Solid range.
Yeah. And adjusted EBITDA, they expect that between $540 million and $560 million.
So continued strong performance baked in.
It looks like it. For you, it suggests management really believes this momentum is sustainable and their strategies are paying off in terms of solid financial health moving forward.
So wrapping it up, the core takeaway seems clear. HealthEquity had a powerful Q2. Growth in assets and accounts looks really robust, especially on the investment side. And they're projecting this momentum to continue, helped by those legislative changes in savvy users.
Which leads to a good final thought. Considering these strong results and this changing legislative picture, How do you think health equity's growth, especially in HSAs and these other consumer-directed benefits, is going to shape the wider healthcare savings world over the next few years? In terms of who uses them and how.
That's definitely something to chew on. Thanks for joining us on this deep dive.